Look, funny thing happened to me actually last night. I was just doing some banking on the interwebs, and I looked. I had a message, and I had a message from my KiwiSaver provider saying you might have noticed a little bit of a drop. You might have noticed a little bit of drop in your KiwiSaver. That's because markets around the world are fluctuating. Don't worry, you're still in the right KiwiSaver plan, and everything's fine. And it struck me that this is the result. Well, it's a result of a lot of things happening in the world, but we are seeing tariff wars, rumours of tariff wars, ceasefires in real wars, and the change of the guard at the White House in America appears to have created, well, a period of churn in all sorts of aspects of the globe. And some of that, and when I'm getting a note on my mobile phone in New Zealand about the performance of my KiwiSaver, I know that's having all sorts of impacts. To get a broad idea about what's happening and what's going on, what risks are, and indeed what possible rewards are, I thought we'd call in a new friend to the show, John Ballingall. John is with Sense Partners. They're a boutique financial, advisement firm, advising firm. Well, he can tell us. He joins us on the line now. John, how are you?
I'm good, John. Yourself?
Very well. What does Sense do?
Yeah, Sense Partners is a boutique economic consultancy. So we advise private and public sector clients on economic issues of the day, and the economic issue of the day at the moment is very much tariffs and trade wars.
All right, and they do have an impact on people's decision making and the risks people are prepared to take.
Yeah, they do. So when you've got all these new trade barriers coming on in the US and other countries retaliating like China and the EU, that all adds up to a whole bunch of uncertainty in global markets. And when global investors are uncertain, they tend to hold on to things, and the economy tends to slow down a bit. So, we're definitely in a challenging environment at the moment, and we're going to see a lot of market volatility over the next few months.
Okay. Are there investments, financial devices that in a situation like this go up in value because they're safe harbours?
Gold is the one that tends to be the safe harbour asset, and we've seen the price of gold go up a fair amount this year. But beyond that, you can look towards sort of long-term government bonds, or even just sit on your cash. But right now it's pretty hard to avoid a lot of the volatility.
Okay. Are there share markets, I presume, are declining, are dipping?
They are indeed, yes. Yeah, no, it's fair to say that big businesses around the world are not enjoying this period of uncertainty with the new administration in the White House. It's highly unpredictable, it's highly uncertain, and when that happens, businesses tend not to be terribly keen on investing anything anywhere or hiring new people. It all points to a global economy that's likely to be pretty sluggish over the next year or so. And that's generally not good news for markets.
And that's globally. That's everywhere in the world, John?
Certainly all the big markets are responding in the same way at the moment. They're all down at the moment. So, as always, if the US share market starts sneezing, the rest of the world tends to catch a cold.
All right. So it is a time for caution, or are there huge opportunities for someone with big enough cojones?
if you've got the big balls, then there's always opportunities out there, and it depends on your risk profile. But I think the key thing from an investment perspective in terms of something like KiwiSaver is probably just try and stay the course. KiwiSaver investments are a long-term investment by people, and the markets are going to go up and down over time. But I think the important thing is not to panic, not to get too focused on day-to-day movements, because you're probably not going to need your KiwiSaver tomorrow.
No, and that's
Probably
why I
the
don't
best
sweat
thing
it when I get a note from the bank saying it's gone down a bit. Yeah.
Yeah, the key thing is just hold the line, and a global economic markets do go in cycles, and while it's tricky at the moment, it too shall pass, and hopefully there'll be a more positive economic outlook in coming years.
Okay. John, I guess the other thing for most New Zealanders in the street, or for a large number of them, strangely enough, a smaller proportion than you might expect of platform listeners, a lot of our people have paid off their mortgages and own their own homes outright. What does this mean for interest rates in New Zealand and mortgage rates in New Zealand, which have been on a downward path?
Yeah, they have, and we're pretty close to the bottom of the interest rate cycle. So mortgage rates, they might go a little bit lower, but not a whole heap. But obviously, the potential for a trade war is a bit of a joker in the pack there. So if the global economy really turns to crap, then that's going to affect New Zealand's exports. That's going to slow economic growth down, and that could lead to perhaps further interest rate cuts as the Reserve Bank looks to stimulate the domestic economy. So that's one potential outcome. I don't think we're quite there just yet. We're in the pretty early days of this trade war and how it might flow through, but there are definitely some downside risks there in terms of interest rates. Yeah.
John, I'm going to ask you another question, just because I know if I don't, I'll have all sorts of loopy friends asking me why I didn't. Where's crypto in all this?
Yep.
And I see that crypto is kind of a thing that Trump's showing some passing interest in.
Yeah, look, the interest in crypto that has definitely been building as an opportunity for investments. But again, it really comes down to your risk profile. For me personally, I just don't know enough about it to invest in it with any confidence. I think it'd be the sort of thing you need to do a lot of homework in before you commit too much money to it.
Yeah. Now, Ben's taking notes here because he's got a shares. You've got a shares account, haven't you, Ben?
I got some money in some shares, yeah.
Okay. What should you be doing if you are and I'd call that the hobby share market speculator? And I'm not asking you for any financial advice that could be relied upon, etc. Disclaimer. Is there anywhere that isn't being hurt as much as other places? Any sectors, any commodities, apart from gold you've already mentioned, that are kind of holding up?